Are we getting on, people? Just going to wait for a few more people to join, and then we'll crack on. I'm probably going to run this live trading session today up until about 11:30. I've got a meeting at 12, so I'm going to do some prep for that afterwards. But gives us 45 minutes to run through the markets, run through some analysis, answer any questions that you guys have got, and then yeah. What I'm going to do before I start is just get this link to the live thrown out on socials and stuff like that. Just see if we can get a few more people in here. Won't be a second. In the meantime, if you have any questions, get them answered. Get them asked, sorry. I said the same thing yesterday. Let me know as well if the music is too loud, if you can hear me. If you can't hear me very well, let me know, and then I know to change things and alter things. Won't be a second, people. Literally just getting this link shared out on socials. Won't be a moment. Let's have a little look here as well. It'll be a second. We'll get this live going in just a sec. No music is loud, bro. Okay, sweet. I'll get this dimmed down. In fact, what I'll do is I'll turn it off for now, just as we're probably going to start live anyway, and it means that obviously we can concentrate and I can get those questions. Oh, you hear as well? You hear me well? Is it too loud? Is it not too loud? I mean, like this, is it all right? You let me know. But yeah, as I say, I'm literally just getting this link sent out to people, and then we can crack on. Sorry to keep you all waiting. In the meantime, if you have any questions, stick them in the comments and I'll get them answered. Okay, sweet. I think it just kind of, you know, it's when it's quiet, it kind of fills that noise, doesn't it? That noise gap. You want to learn Forex? That's sweet. I mean, what we can do, if you have any questions regarding my analysis today, I can get them answered for you. So if there's anything you're unsure about when I'm running through it, let me know. And then, yeah, I can talk you through it. That's not an issue. Not an issue at all, mate. Are we waiting for a pullback? So, we're not essentially waiting for a pullback here. Well, yes. So with AUD USD, right, what I'll do is I'll just jump straight into the analysis now, and then we'll just, you know, people will join over time, I guess. So essentially, what we are seeing on screen at the moment is AUD USD. We are looking at the 1 hour time frame. Let me just get rid of this. 1 second. It'd help if I got rid of this this thing that I've got on up here. Okay, right, let's crack on. So essentially, we are waiting for a pullback on the higher time frames with AUD USD. I was actually just having a look at Euro USD and AUD USD because they coincide quite well with my analysis. As we see on the Euro US dollar as well. I'm wanting to see price pull back as well with this pair. I've got a zone here that I want to see price pull back into. So if you want to highlight these zones yourself, by all means do so, because these zones hold good validation for a potential area for price to pull back in order to see price go on to take its next impulsive wave. Okay, so yeah, essentially we are wanting to see price pull back into this zone here, and then that will give us an area to start looking for selling positions. Now, obviously this is a long way away. We have just seen a continuation in bearishness. There's clearly a lot of supply in the market, which is encouraging price to continue to fall. So I am wanting to see price recover, start providing us with the necessary structure that we want, which is bullish structure. So your higher highs and higher lows. Once we have that, we can actually look to buy into this market. You're using a phone, okay, that's sweet. I mean, do you have TradingView, the app? Because this is TradingView on the laptop, but you can actually get it on your phone as well if you have a smartphone. But yeah, essentially we want price to start trailing up into this zone. So obviously, you know, this is a long way away. If we get our ruler out, we're looking at 800 pips. So that might seem like, oh bloody hell, we have to wait a long time before we can actually get involved in this market. Well, as I said, we can actually look to get involved in buy positions. So we can look to buy into this market before we sell into it. We just need the confirmation that price is actually reversing and going bullish. What we are seeing here is price is starting to slow. So we've seen a lot of supply being introduced. This has pushed the market lower. As we can see now, price is kind of starting to consolidate. It's starting to slow down. Yeah, I'll show my gold analysis in just a moment. price is starting to slow down, and to be quite honest with you, I wouldn't be surprised if we start to see price reverse going bullish. So what we'll want essentially is for these structural highs here to break in order for us to even start to look for those buy positions. So that's why I've highlighted, that's why I've got an alert set here, because I'm wanting to see this structural high here break. Now people ask me all the time, well, does this wick count as, you know, as some kind of structure? Well, yes, it does, because a wick is actually a candle on the lower time frames. This is a structural high. So what we want to see, if I just draw my path tool out, just get my path tool, I want to see price break above this before I look for buy positions. Once price has broken above this structural high here, we will expect price to trail back. Price always puts in those corrective waves, so I'm wanting to see price put in a corrective wave back down like this. This is where we'll look to get involved in buy positions. We'll have a more refined entry because of this, and then we can get involved in those buys and trail this all the way up into our supply zone here. So that is my analysis for Euro USD. We are literally just waiting for confirmation in order to get involved in buy positions. I'm not going to be looking to sell into this market because I've got a feeling that price is eventually going to reverse. What I've done here is I've marked out a supply zone here and a Fibonacci box, but this Fibonacci box is actually going to be invalid because price has continued to go bearish. So that would be invalid now. But yeah, that's my analysis essentially. So wait for structural highs to break before you even look to introduce yourself into a market. When we look for these reversals, it's extremely important that not only we wait for the right confirmation, but we have enough confluence to coincide with what we want to see in the markets. So in order for me to even look for those buys, I want to see this structural high get broken here, okay? I will not be looking to neither sell or buy into this market until I have that confirmation. So I'm just gonna put a little note here. BOS needed. BOS stands for break of structure, and that's when we can look to get introduced into the market. Got window cleaners here now, so my dog's probably going to start barking. Started today. Oh, you started trading today? Well done. I mean, it's a long journey. Bear with me 1 second. Just got the window cleaner here now. Won't be a second. Apologies there. Window cleaners are here, so dog's obviously gone a bit crazy. But yeah, essentially, that's what we want to see. We want to see bullishness be introduced, and then we can obviously look to get involved in the market. But well done for starting today. As I say, it's a long journey, but as long as you are going the right way about things, then it should be a successful one. I think the most important thing is to start your journey off the right way, and not make the mistakes that some of us make at the very beginning. What I'm going to do is close this music tab here. Just hopefully this will help the stream not be as laggy as well. Let's have a look. I'm just going to close a few tabs off. Hopefully that will help with the stream, because I can see that there's a bit of a delay on the stream. So okay, so you wanted me to go over gold. Let me load this pair up for you now. Won't be a second. So evidently, just looking at the market from the offset, obviously we can see price is extremely bearish. We have seen a continuation in bearish structure. So realistically, we want to be looking for those sell positions with the current way that the market is being, and what's going on fundamentally. We can probably expect a continuation in bearishness. I don't see why it would slow at all. Now, let me just get this up. Okay. Close that. There we go. Okay, so as we can see here, I had a last buy to sell candle that I highlighted. So this is looking at supply and demand fixed leak. If you don't know what a buy to sell candle is, when I've highlighted this buy area here, if I just zoom in, you can see that we have a lot of buy candles before a heavy push lower. So what's happened here is we have had a lot of buy orders that have been executed here before we've had a strong move lower. So essentially, we have a lot of unmitigated areas that need to be closed in order for price to continue moving lower. So what we've seen, so when price came down this much, we can then expect a retracement back into this zone, back into this area before it takes that new bearish leg lower. That's exactly what happened. We saw price penetrate this zone and then price went bearish. So this was an area that we could have looked to sell from, like a re-entry for a sell position. I actually gave this to some of the guys in the VIP chat. So I think there was an opportunity that we could have had there. I've also highlighted one here as well. As we can see, price has never come up to clear this unmitigated area. There's a lot of inefficiency in the market as well. So between these lows, or between this last buy impulse, we have all of this inefficiency here that is yet to be cleared. Price obviously came up to about there. We have all this inefficiency. So I would like to see a higher time frame retracement back into this zone potentially, where we can then look to get involved in sell positions moving forward, because this market is bearish. So realistically, we want to trade with the trend and not against it. That is one of the most important things I have learned over the years, is to always try and trade with the prevailed trend, so the overall structure of the market, because that way you've got your probability of being successful is going to be a lot higher. So yeah, this is a last buy to sell. I believe price could come and trail us back into this before it continues bearish on the higher time frames. So if we just look here on the higher time frame structure, we can see that price is extremely bearish. I had another zone here, but price never came to tap into that. So I can get rid of this. As we can see, I had another one here, and if I pull this across, it coincides perfectly. So price came and set this low, price came up, it trailed all the way back up to this last buy to sell. And as we can see, that started its next impulsive wave. So imagine if we had got involved in sell positions here. This is obviously an opportunity that I missed. I look at quite a few markets, so sometimes I do miss out on some of my analysis when alerts don't go off. So imagine if we had set a position here. These are the profits that would have been generated. We would have had a 1 to 12 risk to reward ratio just on this position. Obviously, it wasn't a trade that was placed, so I can't say that we were successful with this, but my analysis played out perfectly with that. Now we just get rid of these, just clean up the charts a little bit. What we want to see is bullishness start to get reintroduced. So very similar to the previous pair I was looking at, we want to start seeing these structural highs break, and that would instigate the potential of a lower time frame reversal or a corrective wave to be put in, and then we can obviously look to get introduced into buy positions, but that would be trading against the trend, so we need to be careful when we do that. But there's no harm in doing that. I would always say just try your best to trade with the trend and not against it. So this is a structural high, so we'll just put BOS needed. I want to see price, so we just get rid of this path here. This is how I want to see price play out. And this is exactly how I would look to trade based on how structure would play out. So essentially, price would come up, break structure, so break this structural high here, come back down, set a higher time frame or a higher low, and then go on to set another higher high, and then we would see bullishness continue, and that's when we know price is underway. Eventually, it will tap into this zone. What will happen then is all of these orders will be cleared, and then we can start to look to get introduced into those sell positions when we see bearish structure being introduced into the market. So as soon as we start seeing lower highs and lower lows, we see breaks of structure to the downside. That is when we can look to get reintroduced into the market, and we can have our take profit set somewhere at a previous structural low. So I just changed the color of this, change this to yellow. If we were looking to get involved in this move now, obviously like I said, I want to see a break of structure here to the upside. Once we have that, that's my first piece of confirmation and confluence that price is ready to reverse and start setting new highs and lows. So then what I'd do is I'd wait for price to come back down, give us a refined entry. So I would probably look for a last sell to buy candle, which would be highlighted somewhere here. So we would look at an area where there is orders waiting that needs to be cleared within this impulse, this smaller impulse here. Price is obviously going to come back down, tap into that, and then go on to set its next impulsive wave. So once price taps into this, what I would do is I'd then go down to the fractal structure. So I'd then go down time frames, maybe the 30-minute, the 15 and the 5, and I'd wait for price to start putting in bullish structure here. Once we have that, I would set my position. I'd have my stop loss set below the structural low that was created within this move. And then I'd set my take profit at my higher time frame point of interest. And as you can see, that would generate me with a brilliant risk to reward return of a 1 to 15. Just having a look at the comments here. Thanks for the clear explanation. Gold needs patience. Absolutely, yeah. I think we need to be very patient when it comes to trading gold. But I do believe that we are going to see bullishness get reintroduced into this market very soon. We are starting to see price slow down, especially considering we saw a lot of supply being introduced. I think we are going to start to see price slow again and hopefully put in that bullish impulse that we want, where we can then look to get involved in those bearish trades as well. So very similar on the other way around. We would wait for a break of structure to the downside in this case, wait for that pullback. As soon as we have confirmation of bearishness moving forward, we could then set our stop loss above the zone or above the structural high that was created, and then trade us down into this zone. So this way we can take advantage of the buy positions into the sell position, where we can then obviously execute that sell position there. So yeah, that's my analysis. What I'm going to do is actually set an alert, and you guys should do the same. Set an alert at this point here. So 16:42:39.39. Set an alert there. As soon as we have that go off, we can then wait for some kind of corrective wave to be put in, and that's where we can look to get involved in buy positions. So that's my analysis on gold. If you have any other pairs that you want me to go over, if you're unsure about anything that I've said there, let me know and I can try my best to explain it. But alternatively, let's move on to the next pair. So what we have, Great British Pound to the US dollar here. Very similar situation where I'm wanting to see price trail into this zone. We are starting to see bullish structure be introduced. So if I just get rid of this here, as you can see, price has just tapped into a last sell to buy. Now what I mean by last sell to buy is if I just move this to the left, in fact I'll move this down. So as you can see, we have a sell candle here, okay? So this sell candle is holding orders that need to be cleared before price can continue this bullish structure higher. So price needs to push down into this price, into this area before it can continue bullish. Now the reason why this is valid, whereas this isn't, for example, is because when this candle was created, what's happened is we've seen price shoot up and price has not retraced and come to tap back into this. So this again was another valid candle, but we can see price actually came and tapped into that. Let me try and find another example. Here, for example, this is a perfect example. So if I just zoom in, we had sell orders here that were opened. But as you can see, price came down, tapped into it, which then allowed price to continue going bullish. Okay. So that is obviously, that. So what we are looking for is for price to basically do this, but obviously here. Was it there? I don't think it was there. Let me have a look. Yeah, it was here. And price has literally just tapped in now. So what we could start to see probably is the start of bullish structure, a new impulsive wave. We just want to wait for further confirmation, and then we can actually look to probably get introduced into this market. Probably execute some positions today on Great British Pound USD. As I say, I want to see some bullish structure get put in, and then I will be placing positions probably on this market. So let's say, so these highs here that have been set, perfect. I want to actually see this get broken. So the fact that this wick has come to tap into this is a good sign that price is ready to go bullish. All of these wicks here as well is clear manipulation from those central banks. So I wouldn't be surprised now if we see this market go bullish moving forward, goes on to take its next impulsive wave. So I'd look for buy positions probably in this market. So just as an example, I'm not going to actually place anything yet, but say that we place somewhere here now. Obviously we can see that, our stop loss is huge, so I wouldn't want to place a position until I've got a refined entry. But we could even place a take profits somewhere here, and then we can see how that plays out. I want to see bullishness be introduced first, and then once we have the confirmation, that's when we can look to get involved in this market here. So essentially, let me just get a path out. I'll answer your question in just a second, mate. Let me just path tool here. A break in this structural high here. Price to pull back, giving us a refined entry, and then we can trail that up there. So essentially our entry would be somewhere here with our stop loss just below, and then we can look to get involved. So again, I'm just going to set an alert. If you want to do the same, this is the figures. Pause the live now and take down these figures. 1.08370. As soon as we have that break of structure, wait for the pullback, and then we can look to get involved. So you said, hi mate, this strategy you've just explained on gold, is this basically the solid same strategy to stick to going forward as a new trader, then adjust with further learning and progression, etc.? Thanks. So I'll be completely honest with you. When I started trading maybe 7 years ago, I used to trade based off support and resistance. I like to trade with support and resistance, but now I have refined my strategy. So over the years I've really refined my strategy and how I do things, and now I look at supply and demand. So I look for last buy to sell candles, last sell to buy candles, and I look for areas that are probably holding a large amount of orders for those reversals. So the positions that I go on to place are always reverses in price. I'm wanting to catch an entire impulsive wave, whether it's lower or higher. So the first thing you need to do as a new trader, the first thing you need to do when you look at the markets is zoom out. So I'll get up a new screen, a new chart, and I'll tell you step by step exactly how I would look at trading a market. Okay, so first and foremost, I'd go to the day time frame. As an intraday trader, this is probably not the best market to do it with. 1 second. Euro USD, perfect. Okay, so I'd go to the day time frame, This is a double top pattern. I was doing a video on this for clients the other day. So let me just get rid of some of this analysis. Okay. So first and foremost, just ignore all this stuff at the moment. First and foremost, I'd zoom out as much as you can on the day time frame like this. And I'd say, right, okay, so looking at this data, what is it telling me? Where in the market, like what direction is the market going in? So on the 12th of May in 2011, price was set at this point here, yeah? Now in 2022, to present date, price is all the way down here. So evidently the price is bearish. The overall trend of this market is going down. Yeah? So the overall structure of this market is going down. So realistically, we want to be looking for sell positions. Why? Because we want to trade with the overall trend. Why do we want to trade with the overall trend? Because the majority of people who are being introduced and are executing positions on this market are also trading sell positions, because the supply and demand balance is wavered to the side of the supply. We are seeing more supply being introduced into this market than we are demand. So we want to trade alongside everyone else. Yeah. So that's the first thing. So you want to find out what your overall bias is. So the overall structure of the market and what direction to trade in. So with your USD, you want to be looking for sell positions. Then what you do is you come more to present time. So you zoom in a little bit and we go, okay, so price has just recently put in, so we could zoom into this much so we could see two different points of structure. So what we can see here is we can see a corrective wave has been put in. This is a corrective wave, and this here is an impulsive wave. Yeah, I'm just going to change the color of this just so we know. So this here is an impulse. Impulse. And this here is a corrective wave. Correction. Now you might be asking, well, why is this a correctional wave and why is this an impulsive wave? So as we said before, this market is bearish, okay? So with a bearish market, we are going to see lower lows and lower highs being introduced. So lower lows and lower highs. So every time a new high is created, it is lower than the last one. Every time a low is created, it's lower than the last one. Yeah, that is bearish structure. In bullish structure, so we'll just get rid of that. In bullish structure, we have higher highs and higher lows. Each high that is created is higher than the last one. Each low that is created is higher than the last one. Yeah, so that is just clear structure, bearish and bullish. The overall structure of the market. So now we've zoomed in a little bit to more present time. When we zoomed out completely, we saw that this market was bearish. So it was going down like this. So this here, this correctional wave is just this. This impulse here is this. So whatever direction the market is going in, so if in this case it's bearish, when price is going down, so like here for example, that is your impulse. If the market was bullish, when price is going up, that's the impulse. Yeah. So in this example, we are in a bearish market. So this is the impulse. This is the correction. So we'll show you again. So impulse, correction, impulse, correction, impulse, correction, impulse. Yeah. That is clear bearish structure right there. This is a correctional wave. This is an impulsive wave. Lovely. So now, if you wanted to introduce, say, an indicator, I am quite against using indicators. The only indicator I like to use really to find areas and zones, if you're not familiar with supply and demand, and you don't use I don't know, support and resistance, you know, and trend lines and things like that, then you could use the Fibonacci retracement tool. So what you would do, this is how to use a Fibonacci retracement tool. So now that we have distinguished that this is a correctional wave, this is an impulsive wave, in order to find an area that would be deemed valid as an area for price to put in its next correctional wave before it goes on to take its next impulsive one, would be to get your, let me just move that back. So I'm just going to move this slightly to the left, just so we've got a bit more space. Just going to get rid of this as well. So we would get our Fibonacci retracement tool. We would mark the start of this impulse all the way to the end of the impulse. Okay. Now what this has done is this has given us 3 ratios. These are the golden ratios. So we have the 61.8, the 50 and the 38.2. Now this has given us 3 potential areas at which price can put in its next correctional wave before it goes on to take its next impulsive one. So not only does this give us potential areas to look to buy into and then close those positions, but also areas to then look to sell come the future. So say that price trailed us back into the 61.8, which is deemed the strongest. Yeah. So I'm just going to change the color of this because this is the correctional wave. Then what we can expect is the impulsive wave. Yeah. Now the impulsive wave, so I'm just going to change the color of this just so it's easier for you to see. The impulsive wave is obviously going to come lower than the last low. Why? Because we are following bearish structure. Now when we are following bearish structure, as I said earlier, we see lower lows and lower highs being introduced into the market. So if I zoom out, you'll be able to see this a bit more clearly. What have I drawn out here? So I'm just going to get rid of the Fibonacci retracement tool now quickly. What are we seeing here? We are seeing a perfect bearish structure. We've got a correctional wave. We've got a high here. And we've got a low here, yeah? So we've got a correctional wave. We then have an impulsive wave. This impulsive wave has created a lower low. We've then had a correctional wave that's created a lower high. We then have a next impulse that creates a lower low. This is following bearish structure. And this is the overall structure of the market, right? We want to be trading with the overall structure of the market. We've already been able to distinguish by zooming out at the start of our analysis that this is a bearish market. So price is going to play out exactly as we have illustrated here, yeah? Because this is following bearish structure, lower lows and lower highs, right? So not only have we been able to, one, use the overall structure of the market to find our bias and find areas that we can potentially trade from, but we've also been able to predict, both buy opportunities and where we can close those positions and sell opportunities moving forward. So we are essentially not predicting, but we are able to see the story that this market is telling us. So we know that this market is bearish. We know that it is. So again, I'm just going to clone this. This is our correctional wave here. This is our impulsive wave here. Now, with my way of trading now, how are we doing, buddy? You okay? So now, with this way of trading, so now we've obviously been able to distinguish. Just stripping it back to when we started. So we have found the overall structure of the market. So if I zoom out, we look at the market. Yeah, we can see that this market is bearish. So we found our bias because the market is bearish. We want to sell into this market. Lower highs and lower lows, exactly that, mate. Yeah. And then what we've done is we have zoomed in. We have looked at more recent data and we've been able to distinguish that this is the correctional wave, this is the impulsive one. Then we have used the Fibonacci retracement tool. So we have marked the start of the impulse to the end of the impulse. This has given us 3 areas to look to place sell positions or where price could reverse from. We have highlighted that. And then we know that once price taps into this area, it could go on to then set a new impulsive wave taking us lower. So we know that we can look to buy into the market before we sell. Now, in order for us to look to buy into the market, this is where things get a little bit more difficult, and this is where things might be a bit harder to fathom and distinguish. So this is why you need to look at breaks of structure. I've got videos on the channel of how we can distinguish breaks of structure. Okay, so how we can get the confirmation that price is ready to reverse. So it's all good and well being able to find these zones of reversals, but how do we know that price is ready to either take its next impulse or its next retracement? Yeah, so if it's bearish, you sell. If it's bullish, you buy. So bearish structure is for those prices going down. Bullish structure is for price going higher. A correction, buy. Impulse, sell. Yeah, in this regard, absolutely. So with a bearish market, the correction you can buy. The impulse, sell. Absolutely, mate. Well done. So how do we look? So how do we have the confirmation that price? How do we know that price is actually ready to go bearish? So if I just go down to, I'm going to go down to the 4-hour time frame here, okay? Now this is where it's going to get a bit more difficult. Then looking for to determine the next correction. Yeah, exactly that, mate. Yeah, exactly that. So obviously some of you aren't going to know what a chotch is, and I like to call it a break of structure. I know James actually calls it a chotch now. But yeah, I like to call it a break of structure. But yeah, we essentially now that we understand that bearish structure and bullish structure have certain characteristics. So again, I know I repeat myself, but I just want to make sure that everyone understands. That's clear. Bearish structure, bullish structure, higher highs and higher lows. Yeah. So when we see, so let me just get rid of this. And I'm just going to show an example from bearish to bullish, which is how we are able to distinguish when price is ready to reverse in the other direction. So this is clear bearish structure, yeah? Lower highs, lower lows. Perfect. When we see this happen, okay, that is no longer following the structural laws that bearishness puts in, because in bearish structure, it creates lower highs and lower lows. So each high that is created is lower than the last one. So as we can see, this high is lower than this one. This high is lower than this one. This low is lower than this one. This low is lower than this one. Yeah. But what we've seen here now is price actually break structure. I call it a break of structure because price has actually broken this high. This high here was seen as protected as we are following bearishness. So when we see this happen, when we see a break of structure take place, that is our first suggestion that price could be looking to reverse, because realistically, price should not come above this structural high here because we are following bearish structure. Yeah. So the fact that this has happened, we can expect that potentially price is looking to reverse and go bullish moving forward. When we see price come down and set a higher structural low and then go on to create a new structural high, this is clear bullish structure. Yeah. So now because we have had a break of structure, so we've had this structural high here get broken, and we've seen a new higher high be introduced. Because if you think about it, bullish structure produces higher highs and higher lows. So we have seen a higher high get put in compared to this one. So this is this is exactly like this, isn't it? We have a lower high here, a lower high here. We have a higher high here, a higher high here. So this is clear bullish structure being put into the market now moving forward. To back that, we've had a higher low. You look at this, look, higher lows. We're starting to see higher lows. So we can expect moving forward, price is then going to continue going bullish. So this little, this little diagram here is a perfect example of how bearish structure can go from bearish to bullish. Now, what you can do is you can actually I've got a PDF on it, and there are loads of different chart patterns Okay, so there are loads of different chart patterns that you will come across, like your head and shoulders, your double tops, your double bottoms, and these will all give you, these will always be performed in the markets, and they act as reversal patterns. So a break of structure when it doesn't follow either bullish or bearish structure. Exactly right. So say that a market was bearish, yeah, but then it stops following bearish structure and starts following bullish structure. That is a break of structure, yeah. And then we can expect that price is probably going to continue bullish moving forward. And that's how we know we can look to then obviously get involved in that market, yeah. So in this case, what I'm going to do is I'm going to show you where we could have looked to get involved in this market, in this market on this position, on this point of reversal. So price was following bullishness, brilliant. We have seen a structural high being set here, a structural low being set here, because this was the last higher time frame structural low. So what I'm going to do is just let me just get rid of some stuff just to make it a bit clearer for you all. Does a break of structure mean it could reverse from bullish to bearish? Yeah, absolutely. So if you were previously following bearish structure and then we have a break of structure to the upside, then yeah, we can expect probably bullish structures to start being produced, so we can look for buy positions. And then the other way around. So if price was going bullish, if it's putting in higher highs, higher lows, but then it started producing lower lows and lower highs, then we can expect that price is reversing, it's going bearish. Now, the good thing is, because when we look to place positions in the market, you want as much confluence as possible. You'll often hear me say confluence. Confluence is having multiple pieces of evidence that are suggesting the same thing. So I will explain what in a minute, but essentially we had the Fibonacci retracement tool up before, okay, and I had a Fibonacci zone here, the 61.8, right? If we saw a break of structure happen here, we have two pieces of confluence. Not only does it coincide with the Fibonacci retracement tool, but it also coincides with the structural laws that the market's put in. You know what I mean? Yeah, this is a recent chart, so I'm just doing a bit of back testing and showing you all just obviously some examples of bearishness and bullishness and things like that. So what I'm going to do is show you where I would have looked to get involved here in this market, and then we can crack on and do some analysis. So so looking here, so we have obviously this is structure within structure. This is another thing that you're going to have to learn if you want to look for more refined entries. But again, I've got videos on that on YouTube. Go and check them out. But as we can see, within this correctional wave, we have bullish structure being introduced. So this is a structural low. This is the last structural high. This is a higher time. It is a structural high, a structural low. Sorry. And then what do we have here? So let me just draw this out. So yes, this is a correctional wave, but we have this, 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 this. Oh, let me just start that again. I like it to be perfect. So here to here, here to here, here, and then here. And then look, we have this here, right? So let me just change the color of it just so it's a bit easier for you to see. What color can I put it? Right, okay, we'll leave it as that. We'll leave it white. Can you guys see that properly? I know I've got the white impulsive wave here as well. So let me change the color of this impulsive wave to yellow just so it doesn't confuse everyone. So this is structure within structure. So this is another thing that I can go over at a later date. But if I just zoom back out, if I go into day time frame, yeah, what do we have here? Look, so we have bearish structure. We have a correctional wave, impulsive wave, correctional wave, impulsive wave. Now if we zoom in, and we go to the 4-hour time frame, so we're still on the same market, we're still on the same data, we're just zooming in and looking at data in a more refined way. What do we have? We have an impulse, correction, impulse, correction, impulse, correction, impulse, yeah? This is structure within structure. So this is something that you'll need to learn if you want to look for those refined entries. Now, in bullish structure, we have higher highs and higher lows. That is exactly what we've got. We've got a high here, we've got a low here, a low here. This low is higher than this one. This high is higher than this one. This low is higher than this one. This high is higher than this one. This low is higher than this one. Okay. Now what we have, this is our first anomaly, is this high here is lower than this one. Okay, so this is our first piece of evidence that price may be reversing. Okay, so now when this high was created, we would be looking at this market and we would say, okay, we've had we've had bullish structure, but now we've got a lower high that has been created. So this could be suggesting that price is ready to reverse and go on to start setting bearish structure. So what we would do is I would mark out this structural low with a line, and I would wait for structure to break to the downside. So I would highlight this as a BOS, break of structure. So we have our first suggestion. This is basically the market's letting us know, okay, price is getting weaker. There is less demand being introduced into the market, and there's more supply being introduced. So we could see price reverse. Then what we have, if I just zoom in, then what we have is a lower low that was created. A lower low was created here. This was the last structural low that was created that was set in the market. We then have a lower low. This low comes lower than this one. So now what we have is a lower low set. So not only have we got a lower high, but we also now have a lower low. So this is the start of bearish structure. Now you can mark this out however you please when you do your analysis and things like that, but I've just done it like this. So higher highs, higher lows, lower high, lower low. So the market is now telling us, okay, yeah, structure is ready to reverse and continue bearishness. So as soon as this low is created and this high has obviously been created, I am now looking to sell into this market because price has told me that price is going to move bearishness moving forward. Yeah. So what I would do is I would get my Fibonacci retracement tool like I did earlier. I would mark the impulse, the start of the impulse to the end of the impulse, and look at that. What did I say earlier? We look for the 38.2, the 50, and the 61.8. Well, as you can see, price has tapped into the 38.2 and taken its next impulsive wave. So we mark the start of the impulse to the end of the impulse. That gives us an area, being these, that price can trail back into before setting its next impulsive wave lower. So I would have marked that out. This would have given me, I'm just going to get rid of this and get rid of this. So this has given me areas to look to potentially sell from moving forward. Yeah. So as soon as price has tapped into this and given me good signs of rejection, which it has done, it's left wicks here, and it started setting bearish structure. Because again, if we zoom in, so now we're zooming in again into the market. So it's all about refining our entries and zooming in and zooming in and zooming in and looking at structure. So now we've seen bullish structure being put in into this zone. And now what are we seeing here? Bearish structure. So as soon as I see, so we were looking for a break of structure earlier. Now we're looking for a break of structure on the lower time frames. So we want to look for a break of structure on the lower time frames. Well, this here, we could say this actually, because this high is lower than this one, because this is all bullish structure, higher lows and higher highs. This is the last higher high here, the last higher low. So we zoom in, and we can go down on time frames. So if I just go, let me just replay this, just so I don't lose my spot. Go down on time frames. So we're going down on time frames again, just so we can see things a bit more clearly. So this is how I do my analysis based on structure, yeah? And I've got videos on this, so you can, if you want to go and look over this again in another way, you can do. So now that we have found breaks of structure to the downside on the higher time frames, we've been given the confirmation we need. Price has tapped into the Fibonacci retracement zone. We've now had a break in the structural low. As you can see, look, this was a structural low here. Price has broken below this, which is now suggesting bearishness moving forward. We wait for a pullback. So again, we could get the Fibonacci retracement tool. Price has, let's have a look. Price has basically tapped into the 50 here. I would look to place my sell position as soon as I see rejection. So this candle close, so I could probably place it. I probably place it somewhere within this. My stop loss above the structural highs. Say that we place it here. As soon as we see this green candle engulfed, I've placed my sell position. My take profit will be set at the last structural low, so here, because we are following bearish structure now. We're following bearish structure now, so we can expect that this last protected low is going to be broken, because in bearish structure, the lows get broken, the highs don't. Do you calculate areas so you know what value to put take profit at? Absolutely, mate. Absolutely. So if you look here, for example, I've got my stop loss set above a structural high, and I've got my take profit set just above the higher time frame structural low, because I know that this take profit is going to be achieved. So because my stop loss is set above this structural high, which is protected within bearish structure, the highs don't get broken, but the lows do. I know that this trade should play out down to my analysis. So if we press play here, so we would set it maybe a little bit higher to these previous structural lows, structural highs. Sorry, that was probably a bit too refined with that there. But we'd set it at maybe the last structural highs that were created. And as you can see, take profit is achieved. And that is the beauty. That is the beauty of just understanding structural laws. So your higher highs and higher lows, and your lower highs and lower lows. It's as simple as that. Now, if you wanted to be more in depth with your analysis, and you wanted to find specific zones, like very specific zones to enter in on, then that's when you can start to look at supply and demand, and you can start to look at last buy to sell candles and last sell to buy candles. Now, this looks as though it came up to sweep these last buy to sells before going on to continue bearish. But yeah, essentially that is structural laws. That's how we place positions based off structural laws. Yeah. But as I say, we've got videos on YouTube going over breaks of structure and how we can place positions based off breaks of structure and things like that. So if you wanted to have a more in-depth look on that, literally just go over to the YouTube channel, and you'll go onto the YouTube channel and look at our Learn to Trade videos, and you'll be able to see for yourself exactly how to go through this. Kind of run through it there. As you can see, I took advantage of a position here. I placed quite a few positions as well. Placed a position there. That was a nice one. But yeah, now essentially what we're wanting to see is, so now just going to actually some analysis on what I want price to do moving forward, is I do want to see a bullish correctional wave to be put into the market. Now here you might be wondering what this box is. This box is a last buy to sell candle. This is a completely different way of looking at the markets. This is a way of trading that I am very in sync with now. But as you can see, we have a large plummet down. Okay, price has not been able to close positions here because these green candles represent buy orders. So buy orders have been put in onto this market, which has pushed price up slightly. Yeah, these orders have not yet been closed, and then price has continued to go bearish. So realistically, we want to see price come and tap into this at the very least before it goes on to set its next bearish impulse. Yeah. So we'll just get rid, I'll get rid of this. Get rid of that. I can guarantee if we get this, we do that. Actually from the higher one, let me just get from a higher one. Maybe from here. Almost coincides with the Fibonacci. Sometimes it doesn't, the Fibonacci doesn't coincide every single time. But this is why it's very important to have multiple tools in your toolbox so you can understand different things to look out for. So again, this is your last buy to sell. Realistically, I want to see price trail into this before it continues bearish. If it was to continue bearish, I know there's a lot of supply in the market at the moment, so that could be the case. So we could potentially look to sell from this zone. So if you do want to take note of that, do so. So the Euro USD market, we're looking at the 4-hour time frame. This is the zone I have highlighted here. This app is called TradingView. Good stuff, good stuff. Thank you very much, Red November. Yeah, man. I try and be as informative as possible and try and hopefully I make sense when I say things. I mean, sometimes I find myself going off on a tangent and I'll ramble on, but hopefully it all makes sense. I know it can be quite confusing looking at highs and lows, this, that, and the other, supply, demand, support, resistance, trend lines, all that kind of stuff. But if you just watch what I'm doing and you watch it over maybe 1 or 2 times, then yeah, you're gonna get it eventually. You know what I mean? I often forget like how hard it was for me when I first started. But yeah. What I'm going to do is just have a look at the markets, just see what's going on. So we are actually seeing price come very close to tapping into a zone that I am looking to sell from on the USD JPY. So with this is a sell zone that I found, kind of similar to your Fibonacci zones, but it's using supply and demand instead. Where's my path tool? So I'm wanting to see price come and tap into this like we do with the Fibonacci, and then put in a break of structure where we can then look to sell into this market. So I'm looking for potential sells on this. I just want to take a note of, I just want to wait for price to come and tap into this zone before I can look to get involved in those into those sells. Euro AUD, again, very similar situation. I'm wanting to see price trail us into this zone, deliver us with the confirmation we need, and then we can look to get involved in those sells. So again, this is following clear bearish structure. This here is the impulse. This is the correctional wave. And then it's going to take its next impulse, yeah? So I'm just going to change the color of that. We can put it up to 4. So we can see how that's following bearishness, because this high that it comes to create is lower than the previous one. So it's following clear bearish structure. And if I zoom out, this low was higher than this one. So that's following clear bearishness. And we've got a higher high all the way up there. Repetition isn't put the reps. Yeah, exactly that, mate. It is literally just a case of just back testing, practicing, you know, using these things, and the most important thing is once you've learned how to do something new, or once you've watched how to do something new, is literally just go and back test like I've just done there and put that work in. So when you notice and see these things, doing that. I've actually got a video coming out at sometime today. A learn to trade video sometime today. So like I mentioned earlier about chart patterns, so you have like your double tops, your head and shoulders, your double bottoms, your inverse head and shoulders, all that good stuff, your triangles. I am actually going through a mini series within Learn to Trade. And I've got a new one coming out later today. I think it's about 4 o'clock. I've scheduled it for. And it's basically showing you guys how to trade a head and shoulders pattern. So obviously we look for all the confirmation we need. And then what we can expect is for head and shoulders patterns to be put in at these areas, at these points of reversal, basically. We can expect these chart patterns to be put in, can't we? So that's where we look to trade from, essentially. And these chart patterns obviously just offer us an extra piece of confluence. So not only have we found a zone, to buy or sell from, but we've also been delivered with a valid chart pattern. And then on top of that, we are also trading with the prevailed trend. So that's 3 pieces of confluence that are backing our bias to place that trade there. What you want to do is you want to ensure that you have a few things, yeah? So I would always say, when you're looking to trade, I would always say have 3 pieces. So you want 3 bits of confluence. Confluence. I can't spell. 3 bits of confluence. You want to, so, and these 3 pieces of confluence, at least one of those pieces of confluence needs to be trade with the trend. Overall trend. So you want 3 pieces of confluence. Let me just do this. So you want to trade with the overall trend. That's rule number 1, definitely. This shouldn't even be a part of the 3 pieces of confluence, but you want to trade with the overall trend. You want to find areas, specific areas to trade from. So using the Fibonacci, using supply and demand, things like that. You then want to look for potentially a chart pattern. So look for chart patterns, or candlestick formations, as they are going to give you extra confluence. And then you need to make sure that your risk to reward ratio is at least a 1:2. So risk to reward ratio is at least 1:2. My risk to reward ratios are always more than 1:2, but let me just change the color of this to white, move it along. So you want to trade with the overall trends. Let me just space these out. Trade with the trend, find specific areas to trade from, look for chart patterns and candlestick formations to help build that bias, and then you want to make sure that your risk to reward ratio is at least a 1:2 every single time. So when we are placing these positions, we are risking 1 to gain back at least 2. You know what I mean? So if you are someone that risks 1%, you are risking 1% to gain back at least 2%. You don't want to be placing a position if you're only going to gain back what you risked. If you're placing a position, you want to gain at least doubled back every single time. I risk 2% of my equity for every trade that I place, because I may only place maybe 4 or 5 positions in a week. and my success rate is relatively high, so I feel like I can risk 2% of my equity on a position. So with a 2% risk, that is acting as 1 in this scenario, and 2 is double my risk. So I'm looking to gain back 4%. So for every position that I place, I'm looking to gain back at least 4% of my equity on that position. Yeah. Now I have trades that are 1 to 5, 1 to 10, 1 to 15. You know, I have very good risk to reward ratios because I'm able to refine my strategy and refine my entry. So on a trade, so for example, if I placed a position on this, price came up, tapped into this zone, gave me the confluence I needed in order to execute a position. My stop loss was set just above the structural high there. Obviously, this is not even refining it fully. But as you can see, I have a 1 to 9.5 risk to reward ratio on this position here. Now, if I'm risking 2% of my equity, I'm looking to gain back 19%. 19% from 2% risk. That is extremely good. You know what I mean? And this comes with years of practice and years of understanding how to refine your entries and how to look at certain things in order to be able to give you that edge, maximizing those profits and minimizing those losses. Now, this was supposed to be more of like a day of analysis. I'll keep that up actually. This was supposed to be more of a day of like just going through some analysis. I've kind of been over my analysis. I'm still waiting for price to trail into these zones that I'm looking to trade from. Price has tapped into this. I'm waiting for a break of structure to the upside so I can get introduced onto this. So look for buy positions on Great British Pound to the USD. Just wait until you've got enough confluence in order to execute those positions. But yeah, I hope you guys have enjoyed this live session. It did turn more into like a learning session. And I have rambled on a little bit, but yeah, I hope you've enjoyed it. I hope whoever has been watching kind of understands what I'm talking about. I hope it's helped you in some kind of way, whether you now understand risk to reward ratios, whether you understand structural laws. You know, I hope what we've gone through has kind of given people, you know, that clarity that they may have needed with certain topics in Forex. If you have any questions, get them asked in the comments, and I'll get them answered before I go. But I am going to be calling it a day in the next 4 minutes. I've got a meeting at 12. I was supposed to be doing prep for, but I've kind of got carried away with the live. Let's have a look at previous. See, like here, for example, this was a perfect example of last buy to sells. So as we can see, let me just go back on this. And then I'm going to go to 1 hour. Is it 1 hour? Yeah. So look at this. Just before I let you guys go, we look at this. We've got last buy to sell candles. So these 2 candles here, or these, well, we could say these 3 candles, because we've got a wick there. So these 3 candles are holding a lot of buy orders that need to be closed and cleared before price can continue bearish. So I highlighted those. And why does price need to come back up to this point? Well, because we have seen price come down at an accelerated rate where it's not come back up to clear. So as we can see within this, we have a lot of wicks going up and down. This is clearing any trades that have been left open, any unmitigated areas, any inefficiency in the market that's been cleared. Yeah. Now this big move down, that has meant that we have not been able to clear what was left here. So price evidently has to come back up to clear all of that so we can look to trade into the market. So like with all of these markets that I am looking to trade from, this is the same zone as this is, just on a different market and a different time frame. Yeah. So I am looking for price to trail up into the zone like this on this market here, so I can look to get involved in sell positions. So what we could have done here, placed our sell position, placed a short here, stop loss above the structural highs, take profit, set. Where's the swing low? It's not coming up with a swing low, but we would set it maybe we could have a 1 to 5. So if you're risking 1%, you're looking to gain 5% back. If you're risking 2%, you're looking to gain 10% back. Yeah. Price is tapped in. Price has taken profit. It's as simple as that. Now, obviously, finding valid zones and finding valid areas is what is a struggle, and it's quite hard to wrap your head around. But we have got videos on YouTube on how to find specific supply and demand zones, how to find specific last buy to sell candles, things like that. So, yeah, have a look on the YouTube channel. We've got loads of videos on that. But again, that would have been an amazing position to have placed. I did actually highlight this zone, I just didn't take advantage of it, completely forgot. But yeah, that's what we are waiting for. We're basically waiting for the same thing to happen here, just on these other markets. So I'm waiting for it on Euro AUD, I'm waiting for it on USD JPY, I'm waiting for it on Euro USD. Obviously this is a long way away, this is about 900 pips away, so we can look to buy into this before we sell. AUD USD, same thing. XAU USD, exactly the same thing. That refining definitely seems like the holy grail now. You've explained it, learned more in 30 minutes than I have in 3 months. Perfect stuff, man. I love to hear it. I love to hear it. I mean, we've just had a few more people pop in. If you have any questions before I get off, I am going in the next few minutes. So if you have any questions quickly, if you want me to go over anything, let me know, and I will go over it. But yeah, look, we can look to buy into this market. I just want to break a structure here. We can look to then buy into the market. So quickly, before I go, just so the people who have just joined can see, I want to see price break structure here to the upside, come back down to give us a refined entry, and then we can look to buy in, where we can then look to sell longer term. So I just change the size of this because it's huge. So this is what I want price to do with XAU USD, and I can guarantee if you come back in a week, this will have happened. I can almost put my life on it. AUD USD, very similar situation. Just move this to here. Again, move that there. We want this like this. This up here like that. That there. Fib box. Like that. Perfect. That's what I want to happen with this one. So we can look to get involved. We could actually move this down. This is a structural low here, so we could actually get introduced into this market sooner rather than later. Could actually look to get involved here. Wait for that break of structure. Wait for the pullback. I'm annoyed that there hasn't been any opportunities for us today on this live. Hence why I've kind of gone down an educational route, but yeah. Again, break of structure here. We want to see price trail back up. All of these markets essentially, we want to. They're all in a corrective phase. All of them are in a corrective phase. Price is tapping into this. Probably going to start going bullish very soon. So we can look to. This is probably the only market. Great British Pound USD is probably the only market that we can actually look to trade. Well, in terms of my analysis, anyway, relatively soon. I just want to see bullish structure starting to be put in, and then we can look to get involved. But yeah, any questions, get them asked. I'll answer them before I go. I'm going to go in a few minutes. Meeting was at 12. Yeah. But no, I appreciate the feedback. Red November means a lot.
The Bluetooth is disconnected.
Oh.
The Bluetooth is connected successfully.
Oh. That's my desk talking to me. I've got a Bluetooth desk, so it's got like speakers and that on it, and charging ports and things. So it's just, yeah, apologies there. Okay, so I can't see any more questions, so I'm going to call it a day here. I hope you all have a profitable day, no matter what it is that you trade today. Yeah, and have a good rest of the week. I am doing these on a daily basis, but I'm doing them on my website. I just had some technical issues yesterday, so that's why I did it on YouTube. So I don't know. I might just alternate between the website and YouTube itself. But yeah, I've enjoyed myself. I hope you guys have too, and I'll see you probably tomorrow. Be nice to see if we can get some more people in here tomorrow, and hopefully we can get some positions placed.